Hello, everybody. Welcome to Monologues with Olami Olatunji. I started this series titled How to Improve Access to Capital for Your Business, and I am certain that every episode will have a huge impact on your life and business. Just like you, I'm an entrepreneur. I transitioned into entrepreneurship after working for many years with two leading Nigerian banks, and I moved on to work in oil and gas consulting. And that is when my purpose clicked. I realized that I could help bridge the gap to reduce risk in financing projects using my technical skills and then my financial skills. And voila, I'm here at Brockville Investments. But I had to find myself as a multi-potentialite and then as a polymath. Well, that's a story for another time. I started this series on how to improve access to capital for your business. Because in my work, I've come across numerous entrepreneurs seeking finance for their business. And we all know the statistics that says 65% of businesses fail within the first 10 years of experience. And the reason for failure are numerous. They've talked about poor cash management. They've talked about poor marketing strategy, poor strategy generally, weak leadership. They talk about things like access to finance, of course, is always there. And then over-dependence on a few customers. So, last episode I actually started the series and I talked a lot about how businesses fail and what you can do, and I touched a lot on each of these aspects. You know the statistics that says that 65% of businesses fail within the first 10 years, and if you now look at 5 years or even 2 years, you find out even the percentage becomes even much more alarming. And yes, there are a lot of reasons. But I always believe that if you fix access to finance, if you fix all the other challenges, it's easier for you to fix access to finance because your business becomes more attractive. It becomes more commercially viable. It becomes exciting for whether you're talking about financiers, which are the lenders, the debt financiers, or the equity investors. The business just becomes something that attracts everybody, right? And then you are more confident because you know you are building something tangible and commercially viable. Now, today, I'm going to talk about over-dependence on one customer. I believe that this is the key. One of the very important things that needs to be fixed in a business. So what is it when you say you are over-dependent on a particular customer? Well, there are many ways to look at it. But we know that reliable customers are like the life of every business. You want to have customers that give you consistent business. You want to make sure that every time and for every period, you have customers that give you consistent business. But putting all your eggs in one basket with just one or two big clients can be very, very risky. And the truth is that finding loyal customers, especially when they are huge customers, right, can be very exciting. It can be fulfilling. It's like, but the problem, what can go wrong is that it means that when a certain customer, just one customer, has the lion's share of one business, that means the lion's share of your business is tied to another customers. It means that your growth, your fortunes, everything is tied to their own business. It's tied to that. In fact, the way I usually say that, then it means that you are like their employee, because everything about your business is dependent on their success, is dependent on the way they think. if they cough, it may affect you. If, I don't know, a nuclear weapon hits their business, if that's possible, it would affect your business, right? And that becomes very risky. And different businesses, not every business may be as affected by that, but I think it's something that can happen to any business, no matter the level you are or no matter the space you play in. Just imagine if you are selling cleaning products, soaps and Vim and, toilet cleaners and all this. If that's what you actually manufacture, you may have a particular customer that offtakes a lot, up to like 50% of your business. And that alone can be exciting for you. Why? Because it gives you sustainable revenue. But the day that customer decides to leave, or the day something happens to them, then that is when you would have it, right? It can be good. It can be pretty good because we've talked about the good where you have that peace of mind. But then it can get bloody. It can get bad. And many businesses, especially consulting, when you have a huge big IOC or a big multinational in your books, it's like you've arrived, right? But the day you don't get that repeat business, it becomes a problem. So that's why it's something that one needs to look at to make sure you address it. It's something that you need to look at to make sure you address it. So you need to look for ways to make alternative sources of income, because it's just pretty damn risky to have one customer being your main source of income, or one or two big customers. And I remember a scenario like that while I was in banking, and one of the teams that I used to work. There was this big stockbroking firm that we had secured. We put everything into them. We gave them fantastic relationship management. We go to pick checks, even when they could go and deposit the checks themselves. We just find joy in going to serve this customer. So we went the extra mile and we were able to grow the business. And it got to a point where, if you look at our team's balance sheet size, right, they had 50%. That means their deposit was 50% of our team's balance sheet size, and that was extremely, extremely risky. So we knew that it was like a ticking time bomb that was going to explode anytime. It was going to explode anytime, because once they took their money, then it was like we are going back to ground zero. And that's exactly what happened. So when this customer, of course, they gave us notice. They told us they were going to take the funds at a certain time because they needed to use it to make some other investments. But it was a big blow. Every member of the team had to work double time to match our expectations, because at the end of the year you've already had the budget cut for you that is cast in stone that you have to meet. So if 50% has been taken in June or July, you need to now double work. Of course, we knew beforehand, but it was not so easy to get that, that business, because you had to also pay attention to maintaining that good relationship. So that's exactly how difficult or how dangerous it can be, right? So even if that big customer that we're talking about, they maintain their cash flow, they maintain their business, it can actually disrupt your business, because if they decide to pay late, for instance, right, or they want to exploit their dependence on your business and they push their prices down, it becomes a problem for your business. And also, you want to direct all your resources to building that relationship. Remember the client I told you about while I was in banking? As you direct more resources to build that particular relationship and it gives you big income, there's a likelihood for you to neglect other customers. And after a while, they just fizzle away. Other customers fizzle away, and it keeps you in a very, very, very tight in a very, very tight corner. So how do you manage this kind of situation? Like I said earlier, it's awesome to have a great customer, right? It's awesome to have a big customer that can give you the kind of cash flow that probably you've been dreaming about. It's very good to have them, but there's a risk in over dependence on them, and you need to You need to manage them properly. So how do you manage them? And I'm going to give you from experience that I've had. Apart from the consulting business, we also run a facility rental business. And there was a point in time before COVID where we had a very good relationship with a particular customer. We had maintained that relationship for 2 years. But the truth is that ours was even worse than when I was in banking. We had so much dependent on this customer that they were giving us actually 70% of their business. So they were with us almost every day of the week, 3 days of the week, 2 days of weekend. So they were fully booked by that particular business. And of course, we did everything we could, maintain relationship with their staff and everything. And but while they wanted to leave, despite the fact that they told us, in fact, they didn't even really tell us. They didn't even really tell us. So what happened was the people that we had relationship with, they left the company for, the two of them actually left the company for some reasons. And because of that, to build a new relationship with a new person that was also new to the job, we didn't have that luxury to give up upfront information about their plans and everything. Anyway, long story short, customer took their business away, and of course, COVID happened, and it was a very, very extremely difficult time, trying to get back. But of course, lessons were learned, So despite the lessons were learned, and the lessons were that you shouldn't, be too dependent. And this is what I want to share with you today. So despite the fact that you say over dependence on a particular customer is not so good, you cannot turn down such big business. It would be a very foolish thing to do, to turn down big business from a reliable source, a reliable customer. So basically, the key thing to do is to manage the risk, and there is a risk there, like I've highlighted, like I've shown you. But the reliable thing to do is to manage that risk, right? The risk that is attached to serving this single customer, and then use the extra income you are getting from that business, the extra revenue, to secure more business somewhere else. So you need to manage that risk of over dependence on a certain customer. And I think that's the core thing that you need to do. That would be like the single most important thing that you would have to do. So you should have like some sort of financial protection in place. And what do I mean? First of all, depending on who this customer is, it's key for you while you are starting that relationship to do some checks on the customer. You want to be sure that how do they, what kind of relationship have they had in the past, and how do they, handle their suppliers. So if they have that good reputation, it gives you some comfort. But if you've noticed, maybe due to in your community of people in similar business or that serve this particular customer, you should find out how they treat suppliers. That would give you comfort about the financial protection. That is one. Number two, in the initial contracts, right, that you're signing, it's very important to enforce contractual penalties. So penalties for late payment, because when such customers, they can toy with you, in a way that they might not pay on time. So instead of paying in 30 days, they might pay in 60 days, they might pay much later, and that becomes a problem. So you need to manage this with a lot of tact. You don't want to lose them, but in the initial agreement, there has to be some very important penalties. That will be, that will help you. That will help you so that if they don't, imagine having dependent on a particular income and is not coming at the right time, it becomes a problem. So that's something that you want to do. Another thing that's important to do is you don't want to borrow, right? Maybe borrowing from a bank or any other source to buy equipment to serve this particular customer. What we did was that we ensured that the income from this customer was what helped us, buy a lot of equipment that we had, that helped us even expand to a second space. It was the same income that we used. So we didn't have to go out. So it was like the business generated the cash flow itself. So what you should do is really a better option is if you could lease instead of buying, employ freelance staff That was something that I became adept at doing, right? I'll subcontract part of the work to another supplier. So you can do this until you feel that your business itself has enough growth potential to secure this investment for long term in the business, which means that the equipment that you are buying, the staff that you are employing, they would be for the long term growth of the business to serve other customers, not to serve only this single customer that we're talking about. If you understand what I'm saying, because getting payment from one customer and investing in very heavy facilities might become, if they walk away, you'll be left with those equipment with nobody to serve. But by the time you've grown other customers, you know that this particular investment is serving a whole lot of other people or other businesses. So that's the thinking. That's the way I choose to look at it. Now, another thing you need to do and we did that extensively, which helped us, right, was to work extensively. You need to work closely with the customers about their long-term plan. So you need to understand where they're going. You need to understand what they have planned. So in our own case, we had a good relationship with the staff, right? And we knew that ultimately they wanted to have their own location within our vicinity. So because of that, we knew they were going to leave. But the question was when, right? So if you have that kind of relationship with them, you understand what they are planning. And then it might even help you fill gaps, right, in the things. So for instance, if you are planning to grow and they are planning to expand their business, then there might be a service that you can also offer to fill that gap. So it's something that you need to do. So working with the customer, the management, the staff, or the people inside, having a very good network relationship with them will help you anticipate their needs. It will help you think about their needs. And another thing you can do is to anticipate, to think about market trends. So what are the happenings? What is the news saying? What are government policies that affects your customers' base? So at the end of the day, you are having what I like to call, while I am doing some sales training, is consultative selling. You are with them, but you are like a consultant to them, helping them grow their business. You become very, very valuable to them, such that even if they leave you at that point in time, you have written a mark in them. You have written a mark in their business, and you are able to come back, because they might need you again. They might remember you. They might use you they might refer you to other businesses. So that's one of the very key things that you should do. That's one of the key things that you should do. So another thing is that, of course, and it's almost like the obvious, you need to expand your customer base. That's actually something that you have to continuously and always do, to expand your customer base. So you need to expand your customer base. That is something that you do not want to even wait till you secure one big customer. So having a rich and robust base of customers is jackpot. Basically, it's like you've hit the sweet spot. You need to have different mix of customers. Using that big customer that we've talked about as let's just call it like a lead board that will help you develop business, develop more business. So firstly, whatever investment that you're making in your business, right, it needs to lead to improved offer to other potential buyers. So what you've learned, the lessons you've learned from this big customer can help you improve your offering to other customers, because it's a lesson. You're growing in business, you're learning more, and you're growing. Then another way that you want to ensure that you don't take your eyes off other opportunities is to make sure, I don't know, maybe you employ someone and the job of this person, this staff will be, either you want to focus on this major customer, depending on how big the business is, becomes like an account officer for that major customer, or this person is in charge of sourcing new business. So therefore, it helps you have that balance, because the balance is this: major focus on this major customer, serve this major customer fantastically, and also source for new business. So having that balance is key. And if you need to bring in new hands to do that, then you have to do that. You should also use the extra income that you get from this big business that we're talking about to fund your marketing activities. You want to make sure you continuously invest in marketing. If you have to do training for yourself or for your staff, is something that you have to continuously do. You have to find good sales channels, new sales channels. So if, for instance, your sales has always been going from, I don't know, I don't want to call it door to door, but let's just call it maybe networking and trying to meet new clients, because you're targeting large customers or big business. Then it makes sense to add digital marketing to it. And of course, it's going to be different depending on your kind of business. So the kind of digital platforms or the way, the approach to digital marketing that a retail business that sells phone stands or sell laptops or phones or earpiece or this kind of electronic gadgets that are highly FMCG kind of fast moving will be totally different from what a consultant like myself, our own approach will be totally different. So you need to find what works for you, what works for your kind of business, and you continue going with that, right? The next thing is to keep that big customers business in a very good proportion. So I've heard experts say that you don't want to allow a single customer take more than maybe 20 to 25% of your business, that the risk is too much, that you need to determine for yourself how much is too much. In my own view, you need to determine for yourself how much is too much, depending on your business, right? Yes, in fact, my own approach, when we first started was, we focused on what I like to call low hanging fruits. That gave us a good sustainable base, right? And then we started going for bigger business. So that helped in a season when we lost a big customer. We still had those low hanging fruits that kind of helped us keep the lights on until we recovered from that and all that. So that's what you need to do. You need to determine for yourself how much exposure for one particular business was too much. But whatever you decide, you need to be sure that you want to keep your cash flow very secure. And importantly, your sales options are open. That is the way to survive, because there are going to be ups and downs in the relationship, whatever business entity you are dealing with. We've seen how COVID has changed the space in this business, we change the face of the business that we do. You find out that, and particularly in one of the kind of business one of the businesses that I run, we had a shift because customers shifted from physical to virtual. So we had a lot of customers that shifted, and then we had a different type of customers come on board, and there was something different they were looking for that wanted them to physically engage again. But there were some that left totally and just shifted totally online. So it's a mix. There are going to be ups and downs, and you need to find the right balance that really works for you and for your business. So far, I've been talking about how to improve access to capital for your business. And I strongly believe that the way to do that is really to make your business, attractive, is to increase your revenue. And I've talked about how the different ways where you can make sure you balance this over reliance, over dependence on one particular customer. And I've done that by talking about managing the risk of that over reliance or over dependence, and you can manage that by making sure that you put some contractual for late payments, so contractual agreements in place for late payment, and then you make sure you want to secure the gap. Of course, you also want to expand your customer base. Make sure that you don't, as much as you don't want to take your eye away from this big customer, you want to make sure you focus on other customers or find other customers. Keep your sales option open. Look for referrals even from this business that we're talking about. It's also very key. And then you want to keep your trade, your business in some kind of very balanced proportion. You don't want to be overexposed like the situation when I was in banking, where we had 50% of our balance sheet with a particular customer, or even in my own business where we had close to 70% with one particular customer. When that customer left, we knew how it felt for business. In fact, there was a month, talking of a retail business, there was a particular month where we didn't make anything. As in, a retail business had zero sales. That was crazy, but it happened. So what I would just say is that sales, of course, it's revenue. Having very good sales channels is the revenue is secure. And this leads to cash flow. So therefore, sales is the lifeblood of your business. So if you figure out how to make consistent sales, you have consistent revenue, and you build sustainable, commercially viable, and investable business. So that's just the key. So I'll continue this series talking about the different aspects of helping to improve the commercial viability, helping to improve access to capital for your business. So once again, you've been listening to me talking about how to improve access to capital for your business on Covenant Radio with Olaumi Olatunji. You can find me on Instagram at Laumi Olatunji or LinkedIn at Laumi Olatunji. My greatest mission as a consultant is to help African-focused companies build commercially viable and investable businesses. See you next time.